guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host and owner of Mortgage Specialists, Brent Rasmussen. So today we're going to talk about tax forms because this time of year, every year, I know people get stressed, obviously, to file taxes, to pay taxes, not understanding what there is for deductions, what they get in the mail, what they're waiting on. And as a business owner, I completely understand. Each and every year, as time goes by, paperwork takes longer to get printed, to get sent, to get uploaded, and from our financial companies, also to our accountants and to ourselves as well. So as we're coming to you here in January and February, want to get you ahead of some of the tax forms that you might be on the lookout for, so you can have those tax forms ready to file your taxes. And we're going to show you what forms that you need. This video this week is going to talk about the forms. Next week, we'll talk about a little bit of the deductions because, again, we are not tax preparers, nor are we CPAs. And we have to give full disclosure here that while we are not one of those two individuals, we still understand what the IRS code says we can deduct. And we're going to talk about that a little bit more next week. But today, we're going to do a little bit of screen share to kind of show you documents, what they look like, and what do they mean for you as a person that owns property or has a mortgage or both. So the first document here that we're going to share is going to be called the 1098. And this document is sent to you as a person that holds a mortgage to let you know how much you paid that year in interest. You can see the top of this form, 1098, and it will itemize out the number that you're able to then carry over to the tax returns if you're able to itemize out all of your deductions. So you will get one of these from whatever company that you paid. So you might see all kinds of different forms of 1098s, 1099s. Those are items that you've either received as income or have paid out as interest. So the next form is a 1099. This one's a 1099-S. If you are self-employed, you're familiar with what 1099s are. 1099s are documents that are disclosed to you that you received a certain amount of income, that income taxes were not paid on them, basically. So it might state, here's a 1099 for $5,000. Now you have to go take and claim that $5,000 to the government to see how much you need to pay in taxes. A 1099-S is going to give you the amount that you profited or you sold your piece of property for. So a title company is going to send this document to you in the mail. So if you sold a property, real estate wise, commercial, residential, or the above, they're going to send you this 1099-S that gives you a breakdown of what you need to be able to use to file. So if you are a mortgage payer, you get 1098, sorry. If you sell a property, you receive a 1099-S. So the next form we're going to talk about is what's called a closing disclosure. Here at Mortgage Specialists, we understand people are looking for all kinds of documents. As a courtesy for working with us, we are going to mail you this closing disclosure in January, February timeframe that you will be able to use to help file your taxes. At closing, many times here in the Omaha area, you've paid for property taxes or homeowners insurance or interest on this document. And this document on page 2 and 3 will be able to give you some of those numbers that you might need to file your income taxes. So a closing disclosure is the same document as a ALTA settlement statement a title company gives you. The same numbers apply. So we're going to talk about the next form being an ALTA statement in regards to calculating out the exact number for your profit of selling a property, or whether it's going to be making a new property and you're bringing in cash to close. So this is called the ALTA statement. It stands for American Land Title Association. And this is the document title companies are going to give to you that itemize out all the numbers, whether you're a seller, whether you're a buyer. Sometimes you have your own seller and buyer. Sometimes they're on the same form. Depends on what title company you use. This form will go in hand with your closing disclosure. Same numbers. So you don't need both. You can have one or the other, but generally speaking, if you talk to the title company, they're going to send you this form. If you talk to your lender, we're going to send you a closing disclosure. We just use different uh, breakdowns due to different laws that exist. Okay. So after we receive the final numbers of the closing disclosure, now you're going to want to understand what a tax return is. We call it a 1040. A 1040 is the federal tax return that you can see here on this screen that will talk about your name, your address, your information, how you file. Generally speaking, this is the form that everyone uses to file their taxes with the IRS. There are many other forms that go behind here, schedules, pages, you name it. And so when we ask you for your tax return, yes, we're asking for this page, but all the pages behind it do make a difference and do matter. And we're going to talk about a few of those pages. The first page after the 1040 is always the Schedule A. It goes in order, A, B, C, D, E, F, G. And all those schedules are used for different tax deductions or business reasons, income reasons, you name it. Schedule A is going to allow you to plug in some numbers for taxes and your insurance. Schedule C is a document if you own your own business. This is where you report your 1099 income, for example, if you're a sole proprietor. Or this is where you would report cash received for income for a business. You can also write your expenses off on this document as well, too. So a Schedule C is anytime you are a sole proprietor, self-employed. Once you become incorporated, you can move to a Schedule E. And this might list out whether it is a real estate property that you're renting out or a corporation that files business tax returns, i.e. K1s, will carry over into your Schedule E tax form. And then the last form that we kind of want to chat about here is what's called a 4562. This just allows to itemize out your depreciation and the amortization of how long you're able to depreciate your loan for in regards to tax purposes. I know this might be over many of your heads because there's lots of different IRS tax forms. Today, we want to try to keep it short and sweet just to give you an explanation of what these forms are and what they look like. Next week, we'll chat a little bit more about what is able to be filed, what you're able to deduct or take off. So feel free to catch with us next week so you can carry on to part 2 of this 2-series, kind of preparing for tax season in 2025. We hope you have a great rest of your week. I'm here every week, and you're only a phone call away at 402-991-5153, or check us out on our website at mtg-specialist.com. For this week's Mortgage Matters in Minutes, have a great one. Mortgage Specialists. Driven, trusted, reliable.